It's our favorite time of the week. It's time for Top That Trade. Ready to go a few rounds with us today is Phil Flynn, a Fox Business Network contributor, and Alan Nuckman, an options training pro. Here we go, guys, with round number one. Fat Finger, a size E-mini S&P futures trade was made. Why S&P futures?
Well, it's very interesting. Biggest trade of the year, 16,000 contracts last Wednesday. So that's a big trade. As we say, it's a size trade. Now, a bunch of people piled on because of electronic trading. The algorithms kicked in, and the market's been straight up since that time.
You know, it's weird because, you know, even on the Fat Finger that we had a few years ago that caused the flash crash and everybody was outraged about online trading, but there were real fundamental reasons for that trade to happen. And I think there are real fundamental reasons for the market to break out. Some computer might not have had a Fat Finger, it might have had a really good breakout number because the market's gone up ever since.
I want to do a little bit of math on it. So we are up 40 points since that time in the E-mini contract, which is not these guys, these are the big contract. It's $1,000, so 16,000 contracts times 1,000, $16 million move if they're still in the position, essentially straight up in for that time. And that's why people trade futures, because you have that leverage and you have risk control with the markets trading nearly 24 hours a day. So that's a big, healthy move, $16 million move, and it would have cost $83 million in margin to control that position. So that's a 20% return in 1 week in the S&P.
Let's move on to round number two. 40K someday. Analysts look for the Dow to double in the next 10 years. Seriously? Is this possible?
1,000 next year, don't you agree?
It's probable that we could hit 40,000. If you do the simple
Eventually.
math, and it comes down to compounding interest. You do simple math, at less than 8% a year, you'll be above 40,000 in 10 years. So it's very conceivable. We've come a long way, but for me, it's all about earnings. So we're getting earnings growth, double-digit earnings growth projected in 2017. That's what drives the stock market. None of this nonsense about I'm not even going to bring up interest rates. It has nothing to do with interest rates. It's about the stock market getting this kind of growth.
Right, and the case is that if you go back to the stock market, the one thing that's always been true about the stock market throughout history since it began, it
can go down and up.
Goes higher. No, it eventually always goes higher, right? You know, I remember the first book I ever read on the stock market said that exactly. Hey, today the stock market's trading here. When you're reading this book, 5-10 years from now, the stock market's going to be higher than the record high.
Because money is flowing into it looking for returns. But what I want people to pay attention to is that we're 20,000 in the Dow, but that's not, the big number from that is it's 15% up in 2016 and also 30% off the lows from earlier this year.
I think the other thing that you want to tell people is that with this kind of expectations by you, why wouldn't you want, instead of putting money in the Social Security, to put money in the Social Security.
Oh, now we're going to privatize Social Security?
Why shouldn't the average person be able to participate in this move?
I would agree to that if they lift the caps, because right now the cap is at, what, $117,000 that you don't pay any more Social Security. So if they lift the caps for everybody, that'll make the whole program solvent, and I would be willing to agree to privatize a certain portion if they lift the caps, because that makes the program solvent forever.
Well, it's about time. Next question.
Next question is round number three. VIX mixed up. The volatility, so-called fear index, is nowhere close to the August lows, but the stock market is making new record highs. What does this mean?
It means there's probably more upside. It really does.
In stocks?
In stocks, absolutely.
Right. Man, this job is getting a lot easier. It's a lot easier to work with you now that we're both optimistic.
When was I bearish? Tell me when. Tell me when. Name me one show.
You were
Pull
bearish.
out the tapes.
You were bearish on the administration.
Let's jump into your bonus round question for today. As you know, Santa Claus pays his elves for all that wonderful work they do all year. But how much does Santa make? Does he earn minimum wage, $25 an hour, or $200 an hour?
Santa Claus.
What do they pay Santa Claus? Santa Claus he gets no money, he gets cookies. He gets cookies and milk, that's all he gets. Nothing.
That's true, but if you put that in
there's
a dollar value,
there's no compensation
per house,
plan.
All right, so if you're adding, I guess if he gets paid in cookies and milk, the price of milk is up. How much for a gallon of milk?
I think you like this idea of being paid in cookies and milk.
I like this idea.
I look at your eyes. Your eyes are lighting up at this concept.
What's wrong with that? Come on. The elves, what about the reindeer? How much do the reindeer get paid? I'm worried about them. Or the elves. How much do the elves get paid? $200.
The first one.
Minimum wage? Okay. The answer is $200 per hour. It's a big fat paycheck.
How was that calculated?
Buy cookies and milk. I told you. Just do the math.
That's why he's so jolly. He's happy. Business First AM continues right after this.